Invest Africa, proudly brought to you by KPMG.
Hello and welcome to Invest Africa. I'm Nozipho Mbanjwa. Now, the annual Mining Indaba pulls together a range of different players in the mining value chain. And so in this episode, we bring you some insights from mining CEOs who are operating on the continent. We also get a better understanding of the impact of weak commodity prices on their businesses, and in particular, where do they see investment opportunities? But before we get to those conversations, I had an opportunity to catch up with Citadel's chief strategist, that's Dr. Adrian Saville, as well as Dr. Gil Mahlati, and he's the chairman of the African Financial Group. These two gentlemen were both hosting a discussion alongside the Mining Indaba. Here are some of their views on the sector. Gentlemen, maybe let's start off with the mining environment, how the global dynamics are filtering through to the South African context and really having a real impact on the sector.
The mining environment is difficult for two reasons. The one is you've got important sources of demand that have gone into slower circumstances. And although volumes have managed to stay up in some places, China is an important example where volume demand has remained intact. You just have to have a little bit of foot off the pedal and prices start to come under pressure. And then to add to that difficult circumstance, in the last 10 years or so, you've seen a huge build of productive capability in the environment in which people were talking about the so-called super cycle, which never materialized. And building production capability or capacity into that envisaged super cycle meant that you now have the circumstance of modified demand and a big supply overhang. And that translates into a tough price environment.
So who are going to be the biggest casualties of the slump, and who's likely to survive the bottom of the cycle?
Well, marginal mines definitely will be the first casualties, depending, of course, if it's in South Africa. Marginal mines are those who obviously mine to run mining and selling it, obviously, at $1. But of course, now that there's the rand has weakened, that could make them survive. The secondly is mines that are less mechanized. Those who are more mechanized will probably survive better because they would have less labor problems. But of course, we're not there yet in terms of South Africa.
But are we saying that the South African business model has fundamentally changed on how to do business in mining?
This has been discussed quite a number of times, and that has been a problem for both government and the mining sector, that the mining sector wants to move to more mechanization, and government wouldn't like that to happen. Obviously, the unions wouldn't like that to happen because there'll be job losses. But we are seeing that movement, quietly so, towards more mechanization and less labor-intensive mines. And therefore, those who move or manage to move would obviously be in a better position.
I think there's 2 points to probably throw into those observations, and the first is that the South African mining model is built on architecture that simply isn't sustainable. And if you go back to the history of apartheid, this architecture was put together, this social engineering was put together to make the industry viable by causing labor to be abundant and cheap and artificially priced. And with the dismantling of apartheid, to imagine that you can have the same industrial model in place, I mean, the two simply can't belong together. But in the same breath, you've got a country where you have 25% unemployment, and the language of mechanization is terrifying in terms of employment prospects. It immediately implies unemployment goes up. If you allow for a movie, though, and not just a photograph, the movie recognizes the dynamic. And in the fullness of time, if you have a mechanized mining industry, you have a profitable, viable, sustainable, that's a questionable word, but more sustainable, more viable industry with far better remuneration, far greater returns on invested capital, and that translates into a stronger economy. And there's lots of country examples that have been successful in doing that. Chile is a great case in point.
But the question then becomes, Adrian, how do you bridge that gap? How do we move from a photograph to a movie?
Well, we should have started a long time ago. We're now reaching crisis point. First of all was to educate, educate. Secondly, what really makes this unsustainable is the migrant labor system. If the miners were to stay where they work with their families, we would have less of that. They would move in terms of increase in their, of course, earning, taking their children to school and so on, and so it would be different. Now you get the migrant labor system, the miners themselves, they sustain 2 or 3 families, one at home, another one here. As a result, the distribution and the expenditure, the money that they spend, it's spent on survival only. It's not spent on improving themselves, going to school and so on and so on. So if we were to, obviously the royalties would have come to play to do this improvement, if I put it that way, of the people who work in the mines, the jobs improving, meaning you get to get skilled, you get to understand what you really are mining and understand its applicability, and people move into the industrialization or the beneficiation of what you're actually extracting.
And with that you get huge productivity gains and huge income gains.
Yes.
For miners.
We have the experience and the memories of Marikana very fresh in our minds as South Africans. How then do we approach the upcoming wage negotiations, in particular in the platinum sector?
Well, one has to understand why there was such a problem with those wage negotiations. Basically, miners were getting negative salaries. They were, if you want, the loan sharks were taking the money away.
Because of the microcredit issues.
Microcredit issues. And that was why it was so militant, because it was about their own survival. And that, to some extent, has improved in some of the platinum mines, Anglo-platinum mines. What they've done is they've stopped this stop orders from the salaries and so on and so on. There is some things that are being done in terms of changing that environment and making it less so. And the other thing was obviously the allowance, the housing allowance. The miners would take it, would build some other houses, rent the houses. So there were many other issues.
From a policy perspective, though, we have a freshly minted minister, and we know that investors want consistency and they want policy certainty. What do you think needs to be at the top of the list for the minister as he settles in his portfolio?
I think, to add to that, the issue around policy is one thing that investors demand under any set of circumstances, is they want the highest degree of certainty. Because building a mine is not a 1 or 2 year venture. You're talking about multiple years, multiple decade ventures. So from a policy perspective, I think the imperative is as much stability and visibility in policy as is possible.
Investors are watching this show, they're looking at the context of the slump in commodity prices, and they're asking themselves, where does the smart money go? So where do you invest in this particular market?
Well, look, this is the time to invest. Everything that comes down will go up. And Warren Buffett will tell you when they're afraid, I come in. When they get excited, I go. So this is the time to come in. Of course, this policy environment must be certain in terms of the laws and obviously the regulations. But in South Africa, we are very rich in terms of mining assets. And we have investigated our mining landscape. If you just go to the CSIR, you can see how much research is done in terms of beneficiation across the board. So with this so-called black industrialists and this manufacturing policy that we're going into and the beneficiation emphasis, if it's done well, we should be able to survive.
Yeah, I think the point that Gil makes is you want to be counter-cyclical, not pro-cyclical. It feels very, very easy at the top of the cycle, following everyone else into the pool. But the price of investing, or the cost of investing into the industry now, is extremely attractive. And if you do have the tolerance to see through the cycle, the volumes that will come, the volume and demand that will come through, that will transpire. A great case in point is the motor vehicle industry, which is an important demander of raw materials. Right now, the Chinese vehicle market is already the biggest in the world, 20 million vehicles versus the US is 15. But if the Chinese economy achieves the same saturation as the United States, you're talking about a 100 million vehicle market. And think of the demand for raw materials under those circumstances. So I think there's an incredible opportunity if you can get through the cycle.
Yeah, you see, there are private equity funds for Congo,
Yes.
because Congo is rich in minerals. Private equity funds are coming for Congo because that is, the frontier markets are the future. I mean, what about a stable market than ours, which has got everything? So really, at the end of the day, we need not be that negative. Policy certainty, that's what we need, and probably, in no time we'll be able to ride the wave. And of course, fortunately for us, our union sector understands these things. It's not unreasonable.
Interesting insights there coming from Dr. Gil Mahlati, the chairman of the African Financial Group, as well as Dr. Adrian Seville, chief strategist at Citadel. We're back here in Johannesburg. Let's take a break. When we come back, we bring you a conversation with Neil Froneman, the CEO of Savannah Gold. And in that conversation, he helps us to better understand why he's so bullish on the industry and where he sees opportunities that are ripe for the picking. Welcome back to Invest Africa. Now, if you've just joined us, we're pushing past Africa's Commodities Challenge to find out if there are investment opportunities that are yet to be unearthed. Now, CNBC Africa is at the mining Indaba in Cape Town, and we caught up with the CEO of Savannah Gold, Neil Froneman, one of the lone voices that have been consistently upbeat about the opportunities in the sector, and he has certainly put shareholders' money where his mouth is.
Our whole vision is about superior value creation for all stakeholders, not just shareholders. Having said that, shareholders are still a very important part of the business, so I'm not playing them down at all. Having done that, we've established a very solid operating base in our gold business. We saw the opportunity starting to occur in platinum, which was an easy extension of gold. And we worked through some processes. We worked on 2 transactions together, and as you know, we announced Rustenburg and Aquarius. And the synergies are not at the lower levels of the organisation. The synergies are at middle management and up. And of course, that's an area where there's a whole lot less sensitivity, because those sort of people can get jobs. It's the rock drill operator, it's his helper, and so on, that we need to be more sensitive about. But nevertheless, I think the weakening of the rand in terms of the gold business played directly into our hands. We had a strong balance sheet. We're now generating even more cash, and we've made a very low-cost entry into platinum. We can see the need for further consolidation there, and of course, we will look at some further opportunities.
Is that opportunity with the Waterberg coal operation? Could that potentially be bedded down soon?
Coal is a slightly different subject. Energy costs have become a big cost of our business. It's our second biggest cost. Waterberg coal we're still busy with the due diligence. Waterberg coal we're looking at from an independent power producer's point of view. We need to generate probably 500 to 600 megawatts of power to ensure that we're not totally reliant on Eskom and the increases that are coming through. Waterberg coal, because it's our first entry into coal, we've been very diligent. probably not well known, but in terms of our entry into platinum, we took over a year to do due diligence, assess the market and so on. We got to do the same thing in coal. So I wouldn't expect a quick result when it comes to Waterberg. We're being very diligent.
Neil, when it comes to your relationship with government, we know that there's been a lot of policy uncertainty as well as a trust deficit, which has been a common message that has come through at several mining indabas. What is happening at the table? Are they hearing the private sector's cries, and are we working towards seeing some kind of certainty?
You know, it's very sad, but the trust deficit remains, and especially in the mineral sector. I think there are some ministers that are working very closely with the entire South African industry, not just the mining industry, and I'm referring to the new finance minister. He's engaging. I think it's in everyone's interest to find ways to stimulate the economy and so on. And clearly there doesn't seem to be a trust deficit when you talk about the Minister of Finance. Yet, very sadly, I can quote example, even as recently as yesterday, where there are mentions of trust at senior levels. And to me, that's very sad. We got to stop living in the past, and we got to start looking into the future and move forward. The industry has got no hidden agendas. The industry is open. The industry wants to work together with government. However, until we resolve this trust deficit that you referred to, it's going to be very difficult.
So what do investors like yourselves actually want?
Well, look, we want two things. We want a smooth operating environment, which I referred to earlier, and we want a friendly investor environment. In other words, investors we have to attract investors. They can go anywhere in the world and put their money into businesses, into other mines and so on. If they don't have security of tenure, if we keep on trying to change the rules, if we keep on saying, no, you did empowerment, but we want you to redo it, without acknowledging what's done. I'm not saying more empowerment is bad. If we want to do that, let's just change the law, but let's recognize the empowerment that's been done. So investors don't like that because they can't, they have no certainty in making their decisions. We are dependent on investors to invest capital, to compete internationally. So that's a very important second part of operating successfully.
That was Neil Fonneman, the CEO of Savannah Gold. Now, the investment environment is a key determinant of the potential return of any investment. The team at the Mining Indaba sought the views of the freshly appointed Minister of Mineral Resources in South Africa, the Honourable Minister Mosebenzi Zwane.
Some commodities are finding their way in terms of prices up. It means we are definitely going to move away from the situation where most of the commodities prices have gone down. And that is called a boom.
So job cuts within the industry, these are tough economic times. What is the government's plan to grow the sector? Just briefly give us an overview of your growth strategy.
Well, we have agreed with stakeholders. We have a framework agreement how to deal with issues of job losses, and one of the most critical issues there is to avoid sterilization, meaning avoid closure of mines. Instead of closing mines, we'll seek new entrants in the mines. That will ensure that people keep their jobs.
Just in terms of limiting red tape for international investors to do business in South Africa, what is your strategy with regards to that, to improve the policies in South Africa for investors to come and do business here?
We have dealt with stability issue. We are relatively stable. We know our history. We had 5 months prolonged strike action. So we are stable. We are pushing policy certainty. We are increasing on our research, just to mention but a few, to ensure that the environment is conducive for investors.
Minister, in terms of safety for miners, there's a big tragedy happening at the moment in the country. What is your take on this?
We take serious this matter. We close mines when this happens. We say to our inspectors, let's be proactive. We're talking to unions, we're talking to primary right holders. to say, let us all be responsible. We're dealing with people's lives. We are targeting a zero harm. We should reach it. And we are campaigning vigorously. We're going out of the offices, we're visiting these mines to ensure that safety is a priority. And where we are not happy, we close the mine.
And that was a very upbeat Minister of Mineral Resources for South Africa. That's the Honorable Mosebenzi Zwane. Meanwhile, South Africa's Kumba Iron Ore released their annual results just this week. And with the iron ore price having plummeted 42% in 2015, the miners certainly felt this fall in their earnings that crashed 66%. But the miner is looking at further mechanization to improve future performance and to improve future earnings. Here's their CEO, Norman Bazima, on their numbers.
I think in the iron ore industry, we've been slightly ahead of the curve compared to the deep level mining of the gold and platinum people. They have tabular ore bodies, very difficult to put equipment down there that is mechanized and so forth. We're well ahead of that. We have been using equipment throughout. We, of course, have not been at the very forefront of technology, and in the last couple of years, we've been trying to catch up in leaps and bounds in Kumba to make sure that we are up there with the best. People ask me about driverless trucks, whether we're going to have driverless trucks in Sishen. I don't think so, because we would need to throw away our current trucks, which are quite new. Some of them are less than a year old,
Sure.
and bring in new ones. So we look for productivity in the current trucks that we have, using technology such as fatigue detection technology, such as technology that ensures that things can move at the optimum speed in the mine, such as automated drilling, which was started this year. Those we're going to use to ensure that we can continue to drive that unit cost down.
On the topic of technology, clearly it needs the necessary skills base from your workers to be able to work these new innovations. How do we strike a balance in such a low commodity price cycle where we manage our operating expenses but also invest sufficiently in the necessary skills development to stay ahead of the curve so that when the commodity prices do surge once more, we have the necessary skills base to be at the pace that we need to perform at?
It's a very good question, and a very crucial question for us. Let's take the automated drilling that I was talking about. So we now have drills at Kolomela that do not have an operator in them, that do not have a spotter in them, that doesn't have anybody near them, so that from a safety point of view, people are really safe. But to do that, you need engineers who are able to ensure that the amount of gigabytes that need to travel from that drill to the control room can do so quickly and so on. You need operators who can operate several drills sitting in front of screens in the control room. And we have done that investment, and it's paying off, and we haven't lost any people because we've retrained them to do other things. So I think it's a good balance, and it will do well for us and for everybody in the industry if we can modernize.
To close off with, when it does come to regulation, it is something that is of a key concern to the mining industry. Yes. And we always hear the phrase of a trust deficit being the fundamental cause for a breakdown in communication. Do you believe that as a member of the mining industry now, that the government is starting to heed your calls?
I do. I really think that the government has started to heed our call. I wish this had started a long time ago, but I think it is here now. If you listen to what the minister was saying in the last couple of days at the Indaba, you can see that, A, he appreciates what kind of difficulty the mining industry is now. And that trust deficit and not being able to speak to each other doesn't help. We all need to band together and face the difficulties that the mining industry is in and put it back on an even footing so that we can start to make value for everybody, whether it be employees, whether it be communities, whether it be shareholders, and whether it be the government itself.
You've clearly had operations and worked in several mining fraternities across sub-Saharan Africa, but in a perfect world, in the next 10 years, what will the picture of mining in sub-Saharan Africa look like?
I'm optimistic about where we're going. It's always the case that when you've been through very, very difficult time, you get to reset things. You get to reset your technology. You get to reset how you do the mining. You get to reset relationships. Governments and indeed shareholders have more realistic expectations of each other and what they can do. And I really do feel that that resetting is happening now, such that we can see a boom in the mining industry in Southern Africa into the future.
And that's where we leave it for today's episode. We do know that the low commodity prices may be hurting miners now, but with the optimism of a pickup in the cycle, it seems that the dominant voices are all saying that the time to invest in resources might be right now. Thank you for making the time to join us, but do join us next week as we interrogate the investment case for energy in Africa.
Invest Africa, proudly brought to you by KPMG.